What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we saw a very strong bounce off of the very critical support levels. So the question now, is it time to melt faces? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up 1.61% and we are starting to see that very strong bounce off of this critical support level at 438. And we did get a daily close back over a very critical resistance level, which means we're closing back over the 50 EMA, which is that level right around 444. So right now, what you need to watch from here is whether or not the price action continues to break through resistance, and we still do have a very small gap to fill right around 446. So it's likely we could still run up there to fill that gap before we find some minor resistance. Now, if we blast right through that gap, you're looking for stronger resistance right around 448.5, and the bullish breakout will be back above 450. So while we are starting to see the bullish bounce off support, we need to get confirmation in the price action of the bullish breakout, which on SPY that will be the close above 450. So if we do get rejected from resistance, there's still the possibility we either retest that support level or break down and hit that other support level at 433.5, and then we could get the rally. So you really need to watch this very strong resistance zone right around 448 to 450 because we need to break that level to start getting the face melting rally. And remember, we still do have this valid zigzag pattern that could take us to brand new all-time highs. But the only way this pattern is valid is if SPY holds above 433. And so far we are holding above that level. And so far we are starting to see impulsive price action. So this is a very valid pattern, but we don't have confirmation until we get that close above 450. So watch these three critical support levels at 438 and 433.5 because as long as we're above those levels, you will want to stay bullish because it is still possible we get that face melting rally. So watch these critical resistance levels around 448 to 450 and above 450, we're looking a lot more bullish. We should quickly regain the full bull trend and then we'll have very critical resistance at 458 and we're back on the full bull trend when we're back above 462. So watch these critical levels and pay attention to the price action. And remember, if we do start losing these support levels on high volume selling, you will want to get a lot more cautious because this is likely just going to be a bull trap before we go for another leg lower if we start to see high volume selling. So watch these critical levels and follow the price action and make sure you're prepared and know exactly what you're going to do if SPY gets the bullish breakout, and make sure you're prepared and know exactly what you're going to do if SPY gets the bearish breakdown below support. Remember, your trading plan should not depend on the market having to go higher or the market having to go lower. You should know exactly what you're going to do in either scenario. Jumping over to the NASDAQ 100 triple Qs, you can see we're up 2.24% today, and we are starting to bounce off of that very strong support level right around 335. And so far that level is holding up as support. However, on the triple Qs, if we start breaking below 335 to 334, it is a lot more likely that we are going into the bear market scenario. So this is by far the most critical support level. If we lose that support, you're looking for a retest of the lows at 317 or the gap fill at 315. Now in the bullish scenario, if we start to close above 347, that will be incredibly bullish price action, which means we're more than likely coming up to retest the 50 EMA at 352 or this resistance zone right around 357. We still have gaps to fill right around 349 and 360, and by the time we start breaking back above 363 to 365, we will very likely have a full bull trend, and we will likely have that confirmed zigzag pattern, which could take us all the way back up to retest the previous all-time high. So you're getting a lot more bullish above 347, and confirmation that we're back on the bull should be the next time we start closing above 365. So watch those critical resistance levels and know these gap fills above. And remember, you need to be a lot more cautious if we lose this support level right around 335. In the Dow Jones, we were up 1.46% today, and the Dow Jones continues to look the strongest, which is good news for the rest of the market as a whole. It is very unlikely the Dow Jones is going into a bull market while the triple Qs are going into a bear market, and we're very close to getting the confirmation of the bullish breakout in the Dow Jones, so use it as a leading indicator. If the Dow Jones starts breaking above 350, that will be the bullish breakout. We're very close to having the full bull trend, and we do have a valid price target at the gap fill up there at 360. So above the bullish breakout at 350, you're looking for resistance at 353, 356, and the price target is the gap fill at 360 with very strong downside support right around 345. And the level we need to hold above to stay bullish is down here right around 340. If we lose support at 340, you're getting a lot more cautious with strong support below that level at 333. Right now, it's leaning towards the bullish direction with the bullish breakout in the price action closing near the high of the day and very close to regaining the full bull trend. All we need is that close above 350 and we should see the bulls running in the Dow Jones. On the Russell 2000 small caps, we were up about 2% today and we're very close to closing that gap at 202.5, but that gap has not yet filled. If we start to gap up above resistance, you're looking for the bullish breakout above 203, and then the next bullish breakout will be a close above 208, and we should be back in a full bull trend in the small caps the next time we close above 212. If we break down from here and lose support at 197, you're looking for the full gap fill at 195.7, and below that support level, you're looking for a retest of the lows at 193 and 191. Below 193 to 191, we're likely continuing into a bear market, and we're very close to having the bear trend, so the bulls need to start breaking out above resistance, otherwise the bears are going to take over. On the Arkk ETF, we were up 4.05% today, but don't get too excited just yet because we're still in a bear trend and we're still getting rejected below a negatively sloping 5 EMA, and we still have a gap to fill down here at 54.7. So there's no reason to get bullish on Arkk until it starts closing above 71, and it's more likely that we're going to fill the gap to the downside before we have any bounce to the upside because we are in a bear market on this ETF. So once we fill the gap at 54.7, we could start to bounce and possibly run up to fill the gap at 66. But we still do have the possibility we break down to a new low, so watch support at 52 and the strong support level at $50. On the VIX, we were down 3.5% today, so we do see the VIX continuing to get crushed, and so far we don't see the VIX breaking out above 24. Remember, we're looking a lot more bearish if the VIX breaks above 24, but we're looking a lot more bullish if the VIX crushes below 20. So right now we're still in that choppy zone as we decide if the market's going into a bear market or bouncing and going into a bull market. So use the VIX as an indication. If the VIX closes below 20, the bull market scenario is highly likely. And if the VIX spikes out above 24, you're more than likely going to get the bear market scenario. On Bitcoin, we're currently up about 1.25%. And so far, Bitcoin is continuing that bounce from yesterday, which we did see high volume buying, but we don't have the bullish breakout above 42,000 just yet. If we do get the bullish breakout above 42,000, look for a run up and retest of resistance right around 45,000. And if we get that bullish breakout, we'll likely get the bull trend with the next bullish breakout above 48,000. However, we do have resistance at 42,000 and we are in a bear trend. So if we do get rejected at 42,000, look for a retest of 39,000 or a retest of support down here at 37,000. On NVDA stock, we were up 1.91% today, and NVIDIA did close back above the 5 EMA, but still getting rejected at that resistance right around 223. Above that resistance, we could quickly fill the gap at 230, and above the gap fill, we'll likely test the resistance at 244. We're getting a lot more bullish if we can break above 244 because we still do have that gap to fill at 258. So watch those very critical resistance levels and make sure you're watching this very strong support right around 210 because if that level does break down, that will be very bearish. We will likely develop a bear trend and will likely go down to test that support level at the previous lows at 197. On Tesla stock, we were up 2.38% today and Tesla did break out above that resistance level right around 1021. And the next bullish breakout will be back above the 20 simple moving average, which is currently sitting at 1041. Above 1041, you still have resistance at 1065 and the gap fill at 1087. And above that, you have resistance at 1108 and the bullish breakout above 1150. So as long as we're sitting above this very strong support level right around 996 and 970, you can stay bullish on this stock with the bullish breakout being that break back above 1041. If we lose support at 970, you're looking for very strong support at 937, and below 937, you're getting a lot more cautious of more downside. On Apple stock, we were up 1.41% today, and Apple did test that resistance zone right around 168, but failed to break above that level. Remember, Apple is getting a lot more bullish above 168 with the possibility of filling that gap at 174 and resistance on the way there right around 171. If we get rejected at resistance at 168, you're still looking for strong support right around 165 and 162. And below 162, you're looking for a much deeper correction that could take Apple all the way down to 157 and possibly even retesting the lows at 150. On the financial sector, we had a bullish breakout today, going up 1.37% today and closing back over that resistance level at 37.5. We're getting a lot more bullish if we can close above the 50 EMA. Otherwise, watch for this support trend line to continue to hold up. On the industrial sector, we had another bullish breakout going up 1.82% today and closing back over the 50 EMA, which is going to increase the probability that we're going up there to close that gap at 106. On the healthcare sector, we had another bullish bounce going up 0.96% today and closing back over that 20 simple moving average and holding on to the bull trend. If we can continue bouncing from here, we could retest the previous highs, so watch that support level right around the 20 simple moving average. On the energy sector, we were down 0.81% today as we cooled down after hitting that price target and we still do have the bull trend. If we start closing below the 20 simple moving average, you will want to look for the correction in the energy sector. Otherwise, you're waiting for the bullish breakout above the previous price target. So jumping back over to the S&P 500, this was definitely a very bullish bounce off of critical support, but we don't have the confirmation of the bullish breakout in the price action just yet. We're definitely seeing the Dow Jones leading the way higher, and we're definitely seeing a lot of strength in some of the sectors across the board. So don't rule out the possibility that we could be heading right back into a bull market. Remember that prolonged bear markets are extremely rare without economic recessions, so try to block out the noise and strictly follow the price action. If the price action starts to break out with a bullish breakout and you still have a bearish bias, you could get absolutely destroyed during a face melting rally and completely miss a bullish rally because you have a bearish bias. So if the price action breaks out bullish from here, you need to be bullish, and if we lose these critical support levels, you instantly need to get a lot more bearish. So follow the price action and stay objective and let the price action do all the talking, because the market doesn't care what you think and the market doesn't care what I think. So follow the price action. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility, I think now is the best time to be a bank member. You can find out all the information and learn how to join by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.